Next stop on our journey here, we've got some multiple choice questions from the balance sheet, also known as the statement of financial position in terms of not-for-profit and government. So let's jump right in. Now, as I might have mentioned before, I like to read the question first rather than the information provided. So, what amount of owner's equity does Archibald have on its year 6 balance sheet? All right. What amount of equity? And especially for a question like this, it's important to think what formula or what concept might be critical to understanding this. We see that we have assets, we see that we have liabilities. My inclination is that we're going to be using the accounting equation, but let's read through the whole thing. In its year 6 balance sheet, Archibald Inc. reports cash of $20,000, AR of $10,000, inventory of 4, and net fixed assets of 8. Now that fixed assets, that is net of what? Give you a second to think about it. That is going to be net of accumulated depreciation. Awesome. We could also have AR net, which would be net of, give you a second to think about that. Same sort of concept as accumulated depreciation. We've got allowance for doubtful accounts. That would be what AR would be net of if we had that. It also reports AP of $2,000, accrued expenses of $1,500, and a note payable of $14,000. We've got net income of $22,000. Now, as I was saying, we're looking at this. We know we're talking about balance sheets. We're thinking assets equals liabilities plus equity. And if that's the case, well then, let's answer this question. Assets equals liabilities plus equity. Well, what are our assets? Let's think about that for a second. We've got cash of 20. We have AR of 10. And these would be the net amounts if they mention them. We've got inventory of 4. And we've got net fixed assets of 8. For a whopping total of $42,000. Next up, well, we also have liabilities. Those liabilities are going to consist of $2,000 of AP. We've also got $1,500 of accrued expenses. And lastly, we have a note payable of $14,000. All right. The net income, are we going to include that? Are we not going to include that? Think about it for a second. And yeah, we're not going to include that because our formula is just assets equals liabilities plus equity. Now, if you're saying to me, hey, Nick, your net income rolls into your retained earnings, which is also included in equity, sure, you're exactly right. However, in this case, these are our year-end balances, so this would already be included in whatever we get for our answer. All right, now that we've got all of our liabilities together, that comes together for a total of $17,500. And how do we get equity, also known as net assets? Well, we're going to do assets minus liabilities equals equity. Just another way to rewrite the formula. 42,000 of assets minus 17,500 of liabilities gives us, drum roll please, $24,500 of equity. Right there. Here's our math again if you wanted to take a look. But awesome. Hope you enjoyed that one. Let's move on to our next question. All right. What amount will Regal report as net machinery and equipment on its 2020 balance sheet? Well, that's a great question. Let's take a look and see. Regal begins 2020 with $10,000 in its machinery and equipment account and $1,500 in related accumulated depreciation. All right. Well, we said net machinery and equipment, or net PPE, or net fixed assets. That is going to be what? That is going to be our base amount, so $10,000, minus accumulated depreciation. So that is net. That's our current value, our current book value, our carrying value, however you want to call it. That is our amount. We are trying to find the ending amount. During 2020, we purchased $4,000 in additional equipment and recorded total depreciation expense of $800. Now, if you haven't seen a base formula with me before, let me walk you through it. A base formula, it's nothing revolutionary. It's simply just what's the beginning amount, how much was added in, what do you subtract, and then because of that, what's your ending amount? Think of this simply as your bank account. In your bank, maybe you have $8,500, good for you, and then we've got additions. Well, how much did you add to your bank account for the year? In this case, we bought $4,000 of additional equipment. So the beginning and ending is beginning and ending fixed assets. If we purchased 4,000 more fixed assets, we're going to A for addition. We're going to add 4,000. Similarly, think about it. Okay, maybe you spent $800. Now, that's depreciation expense, which will roll into accumulated depreciation, which is a subtraction from our net machinery and equipment. Lastly, what's our ending amount? Now, for this test, if you haven't seen it before, get used to quite a bit of algebra. I gotta say, it's quite astounding how much algebra you need to do. For those of you coming right out of school, that would be, you've probably seen this more recently. If you haven't, I'm sure you are somewhat familiar, but get familiar with finding the x variable or whatever variable you choose to use. This is going to be our formula. This is how we determine our ending amount. Just, again, like I like to put everything in relative terms to our day-to-day lives, just also as if you had this money in your bank account. What's your ending balance? Final answer here is going to be $11,700 in PPE, in fixed assets, right there. Hope you all enjoyed this question. Please keep going strong. You got this. You can beat this test and move on. Have a great day.